on several issues that have troubled China's financial reform and development. I believe that every reader will find the content they are interested in from this book. I have a strong interest in financial services for the real economy and the real estate financial market. About financial services for the real economy in recent years. Finance should serve the real economy has become almost all financial documents and conferences in China opinions, articles, and media maxims. Unfortunately, so far this proposition has clearly not been well implemented. Otherwise it would not have always dominated the forefront of China's financial development and reform tasks for several years. As a monograph on financial issues, this book naturally does not lack exploration of this issue. As I pointed out a few years ago, the proposition of financial services for the real economy does not as simple and clear as it appears at first glance. After a little investigation, it can be found that it is quite difficult to explain the principles clearly. The problem is that in most people's perception, the so-called financial services real economy refers to providing funds for the production and investment activities of enterprises. With this understanding, if a company's financing needs are not met, financial institutions can easily be described as not serving the real economy. However, as long as one is not biased and has normal judgment, people will not agree with this discriminant methods. Everyone knows that there is a difference between the advantages and disadvantages of enterprises. Normal economic development is precisely a process of continuous survival of the fittest for enterprises. Obviously. Why? If funds are provided to enterprises destined to be eliminated by economic development without discrimination, the financial sector will definitely bear the responsibility for dereliction of duty. Throughout the world, this issue is quite common. So we see that in order to find a universally accepted standard between should be supported and should not be supported, national authorities and even the World Bank have put in great effort. The most typical effort is to compile various types of loan rejection rates, which correspond to lending rates used to draw reasonable boundaries for the lending behavior of the financial sector. However, in practice, even if the index is carefully compiled and various influencing factors are considered comprehensively, it is always difficult to find consensus between borrowers and lenders when evaluating the behavior of the financial sector. As a researcher, I really did trapped in such a predicament. That was at the end of 1999 when the Asian financial crisis was raging. Affected by the crisis, the domestic economy has sharply declined, and many excellent customers have sharply decreased. Many enterprises have been suspended, cut off, or even withdrawn from loans by banks. The so-called situation, the monetary mortgage loan, refers to a loan that can be based on property appreciation. In the event of property appreciation, increase the amount of mortgage loans or further arrange new loans for the appreciation part. The main forms are additional mortgage remortgage and home equity loan. In practice, due to the existence of leverage in such loans, They are an important channel for transmitting information and amplifying policy effects between the financial system and the real estate market. Managing such loans can effectively prevent resonance between the real estate and financial markets. Although such loans are not prohibited by law and regulation in Germany, the financial system maintains a very cautious attitude when engaging in such loan business. In addition, any institution that wishes to issue Pfandbrief mortgaged bonds must have sufficient collateral, and the collateral used for the issuance of Pfandbrief mortgaged bonds must not exceed 60% of the MLV of the property. This proportion is much lower than Spain, 80%, in Portugal, 75% in Ireland, and other countries. This arrangement has actually played a role in suppressing the issuance of loans with high loan-to-value ratios. At the same time, Germany's loan-to-value ratio is usually 70%, which is also lower than countries such as the United States, Japan, the United Kingdom, and France. In addition, the German housing loan market uses a housing evaluation price lower than the MLV of the real-time market value when calculating the loan-to-value ratio. This means that the actual loan-to-value ratio in Germany is even lower compared to other countries where the market value of real estate is widely used to calculate the loan-to-value ratio. Obviously, in the field of housing finance, Germany adopts the principle of prudence in the financial industry. In short, it is precisely because of the heavily fortified speculative factors that naturally exist in the real estate market that have been reduced to, as a result, Germany has become the only developed country among all developed countries that has not been affected by the real estate market interference, thus greatly eliminating the inevitable unfair factors in the real estate market. The structure of the real estate finance market in Germany is also worth paying attention to when it comes to real estate finance. Section by 2019 savings banks accounted for 32.1% of housing funds in Germany. Commercial banks accounted for 24.7%. Credit unions accounted for 23.8%. And building societies accounted for 10%. This structure has greatly weakened the commercial color of real estate finance and has played a positive role in curbing the foam in the German real estate market and the real estate financial market. In short, in the real estate system we adhere to the principle of renting housing, and in the real estate financial market, we adhere to the principle of prudence while minimizing the positive feedback effect between a culture of long-term stability and stability in inflation has been formed and consolidated. After World War I, the German central bank went through a process from decomposition to reconstruction. After World War I, Reichsbank stopped its business. On the basis of the branches of the former Reichsbank, the occupying power established Landeszentralbanken, the central bank of each state in Germany. In order to promote currency reform, the Deutsche Bank was established on top of the state central bank to be responsible for currency issuance, policy coordination, and foreign exchange management. In accordance with the law of the Deutsche Bundesbank, the Deutsche Bundesbank was merged with the State Central Bank and the Berlin Central Bank to establish the Deutsche Bundesbank. Deutsche Bundesbank to perform the functions of the German Central Bank. Both the Deutsche Bundesbank and its predecessor, the Deutsche Banks, have been committed to maintaining the stability of the Deutsche Mark's currency value and achieving low inflation. As shown in the table, they have won widespread praise. During this period, Germany's average inflation rate was the lowest among the group of 7 countries. Weidmann: the long-term stability of Germany's inflation rate has also allowed for the continuation or even strengthening of a culture of stability. A stable culture in Germany is not the norm, and without the protection of the central bank, it is also a fragile norm. If the painful experience suffered by Germans in the years of rampant inflation and suppressed inflation has sown the seeds of a culture of stability or anti-inflation, then the outstanding performance of the German Central Bank in maintaining price stability and promoting price stability has nurtured a culture of stability that not only runs through the era of great stability but also continues to this day. Necessary ineffective labor. Financial literature. One of the biggest characteristics of Ming is irrational prosperity, which includes a large number of investment failures and currency evaporation. It is these essential ineffective labor that achieve irrational prosperity. Acceleration of factor integration, that is, under the combined effect of globalization and informatization, the process of financial transactions are compressed. Efficiency is greatly improved, and the speed of factor integration is unprecedented, resulting in unimaginable scale and effects. Cognitive differences have become an important variable affecting financial activities. That is, different cognitive levels and abilities determine the status and destiny of countries, enterprises and individuals in financial civilization. If they are misled by conspiracy theory and take this as an action model, their future can be imagined. The foundation of this axiology comes from the formula of economic globalization plus market economy system equal money surplus. That is, the exchange-oriented market economy itself is a system of producing surplus money, and globalization has enhanced the ability to produce surplus money. The surplus money provides a prerequisite for the independence of currency transactions from the real economy, creating a currency as the trading object, and carrying out capitalization, securitization, marketization and internationalization, upgrading, and ultimately, it will free from the constraints of traditional media, happily generate money, and create a new economic model of economic prosperity and prosperity. However, this perfect process has been embedded with the original sin of marketization from the beginning. Just like the original sin of agricultural civilization is the original sin of land concentration and industrial civilization is resource monopoly, the original sin of information civilization is information overflow, and the original sin of financial civilization is currency surplus and evaporation. Although Greenspan and Bernanke believed that there was a problem in the market, the media believed that it was the result of excessive morality, financial innovation, and unfavorable government regulation. Soros believed that it was the result of market fundamentalism, and Europeans believed that there was a problem with capitalism and liberalism. They almost invariably ignored the fact that the original sin of the market overproduction and the fact that the surplus currency lost its anchor of stability. Moreover, there is a lack of insight into the commodification attributes of currency. Currency has long surpassed traditional attributes such as exchange, circulation, and storage, and has become the world's most important trading product. The amount of capital trade is hundreds of times as that of real economy trade. As a commodity, it must follow general laws, and it is difficult to escape the cycle of economic crisis. The fate of Ray policies have not yet posed a threat to price stability. The great stability of German currency lies in many aspects such as culture, economy, politics, law, and international environment. The result of the joint action of various factors is the legacy of historical disasters, which is formed by one's own efforts and demands. After the war, the two major inflations deeply planted the seeds of fear of inflation in the hearts of Germans, forming a stable culture among the people. The social market economy system emphasizes the formation of a competitive order by relying on price stability, which successfully tames inflation and protects a stable culture. The German Central Bank, which guarantees independence by law, advocates and inherits a culture of stability to protect the currency as its own responsibility. The dollar standard system and FIX, the exchange rate system of the Bretton Woods system, opened a window of trust for Germans who instinctively no longer believe in any currency. The long-term stability of the German real estate market has avoided macroeconomic imbalances, housing issues. Secondly, the financial national strategy is the most prosperous. There have always been rumors of American conspiracy theory in the financial market. For example, the United States wants to force the RMB to appreciate, just like Japanese asset price bubble in that year, and let China's economy fall into recession. The Southeast Asian financial crisis is believed to be largely due to the financial conspiracy of the UK. The UK used international speculators to destroy the Hong Kong economy, allowing the Chinese government to take over a mess like Hong Kong, while the US cooperated with its actions to profit from it. No matter whether the conspiracy theory is established or not, finance has actually been regarded as an important means of national strategy by the United States and Britain. They are controlling the redistribution of global resources by financial means, such as using finance to control the world's agricultural civilization and industrial civilization. The prices of agricultural products, energy, and resources are all controlled by the futures market. In addition to being regarded as a national policy measure, finance itself has also become an end. such as the United States launching the Kosovo War to prevent the return of European financial capital and blow up the euro. The organic combination of political deception, military strikes, and financial gain has become a common national policy tactic in the United States and Britain. From this it can be seen that financial civilization not only has economic significance in the United States and Britain, but also has significant political significance value. Thirdly, the logical deferral of the industrial economy is the most classic there. The rise of the old financial industry in the UK as a result of the Industrial Revolution raising funds and taking on risks have supported huge investments in transportation, energy, raw materials, infrastructure, and other aspects, promoting manual production to fully enter the industrial civilization era of large-scale machine production. The Dow Jones stock market in the United States provided the main financial driving force for the development of industrial civilization. Through the listing of enterprises, a bridge was built between industrial civilization and financial civilization. For example, the compensation of company executives was changed from the payment law of industrial civilization to the payment law of financial civilization, which instantly magnified the hard work and linear accumulation of company executives in the stock market. And the Nasdaq stock market plays a bridging role in the grafting of new economic civilization and financial civilization, using the interests and rules of financial civilization to stimulate Americans' innovation enthusiasm, which in turn promotes the development of new economic civilization. Satisfy their curiosity about mysteries. However, the success of commercial operation cannot hide the defect of its logical derivation. That is, it regards finance as the core of national strategy, and regards national strategy and enterprise strategy as the main contradiction of financial problems. It believes that this is the bullnose that governs financial and capital movements. The weight of conspiracy is gradually increased under this logical derivation. Conspiracy is characterized by suddenness, uncertainty, and unknowability. As a result, it is either a hammer or an anvil. Therefore, as long as the financial air supremacy is mastered, you can play with other governments and banks at will and plunder their wealth, thus integrating finance and conspiracy. Elevating to an unparalleled and supreme position gives the impression that countries are subject to others without engaging in finance. While highly stable in German financial system, the German financial system has shown extraordinary stability, which is reflected in both the financial structure and finance. The continuity of culture is also reflected in the rare long-term financial stability. The banking industry maintains a three-pillar framework for the long term. Viewing the financial system of Germany from the characteristics of historical evolution, showing astonishing continuity. Since the formation of the three-pillar framework of privately owned commercial banks, state-owned or public savings banks, and credit cooperative banks in the late 19th century, The German banking structure has remained basically stable after 2 world wars, Germany's economic miracle, and the wave of global privatization, while the three-pillar framework of many European countries, such as Spain, Italy, France, Belgium, has disappeared. In addition, the larger policy bank sector has also been continued. The continuity of the three-pillar framework, rather than the three-pillar framework itself, is the most important feature of the German banking structure. The pro-real economy attribute of finance has been maintained for a long time. We will integrate the German financial system with enterprises. By the end of the year, the market valuation of China's investment is known as the pro-real trillion yuan, which was only trillion yuan a year ago. 19th century. That is to say, the development in 1 year is twice that of last year's total. Statistics also show that in the number of investors opening accounts in the Shanghai and Shenzhen stock markets reached 1,000, with an average of over 10,000 accounts per trading day. In the context of global liquidity surplus, the opportunity for concentrated release has finally emerged, with the accumulation of years of sustained high-speed growth energy in the national economy, enhanced profitability of enterprises, appreciation energy of RMB, and enhanced international competitiveness. Although facts have proved that the soaring stock index and the instantaneous expansion of market value are unsustainable, both the number and scale of institutional investors such as investment fund, QFII, QDII, and hundreds of millions of individual investors, as well as the equivalent of financial assets accounting for half of the stock market, and the degree of securitization of state-owned assets indicate that China's economy is undergoing sustainable and irreversible structural changes, and the capital market is becoming the country one of the most important wealth investment and management platforms for enterprises and the people, shifting from excessive reliance on bank savings to the capital market. China is entering an exciting great era from the commodity era, the era of capital finance.